seeking your attention here. A very good morning to all of you and welcoming to the one-day seminar on mergers and acquisitions, which is being organized by Professional Development Committee ICAI and is being hosted by Ahmedabad branch of WIRC of ICAI. I extend my heartfelt gratitude and welcome CA Hiranand Savlani sir as chief guest in the inaugural session. Big round of applause for sir. I also welcome Chairperson of branch CA Dr. Anjali Choksi, Vice Chairperson of the branch CA Sunil Sanghvi sir, my committee colleague CA Neerav Agrawal. I also extend my warm welcome to CA Parimal Shah sir, past chairman of our branch, CA Dharmesh Parekh and Darshan Shah sir, who are seniors of our profession. So welcoming all of you. We have participants from Ahmedabad branch, other branches, and also representatives, respected representatives from other organizations as well. So Ahmedabad branch welcomes you all. And now we start the program, and I request Chairperson of the branch, CA Dr. Anjali Choksi, to escort the chief guest, CA Hiranand Savlani sir, to the dais. Please, sir. Request all the respected members and dignitaries to stand for ICAI motto.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 Pursho nirvimana Tadeva shukram Tada Brahma Tadevamritamuchyate Tasmin lokaha shataha Sarve tadunatyati kaschan Etadvaita
To commence, to start this one-day seminar with auspicious note, I request all the dignitaries on the dais, chief guest sir, and Anjali Choksi madam, and dignitaries of the dais, CA Sunil Sanghvi sir, Neerav Agrawal, Parimal Shah sir, Dharmesh sir, Darshan sir, to please join us for lighting of lamp.
Shubham kurutvam kalyanam Arogyam dhana sampadah Shatru buddhi vinashaya Deepajyotir namosute Deepajyotir namosute Shubham kurutvam kalyanam Arogyam dhana sampadah Shubham kurutvam kalyanam Arogyam dhana sampadah.
This one-day seminar has been very well diligently and meticulously designed and has been offered to you by our chairperson madam, and to talk about it on more, I request her to please address you all.
A very good morning. My morning started with a small incident which I would like to quote at this point in time. When I just got my car outside the main building, there was this person on a cycle. He was driving the cycle. Pachad emni wife बैठी थी. And in that scenario, he was managed to have India's flag on the front of the cycle, and that again motivated me that it's a great morning, it's a great day. We all are proud that we belong to India, and कहते हैं ना, जो देते ना थे जवाब उनके सलाम आने लगे, जो देते ना थे जवाब उनके सलाम आने लगे, आम के पेड़ पे भी आम नीम के पेड़ पे भी आम आने लगे, and चांद पे भी अभी इसरो आने लगे. So congratulations to ISRO and all the scientists, and we are glad that we are proud to be a part of this great nation. The esteemed chief guest and the beloved faculty, friend, and always available for Institute of Chartered Accountant, very passionate for the profession, CA Hiranand Savlani ji, Secretary CA Abhinav Malviya, Vice Chairperson CA Sunil Sanghvi, Managing Committee Member CA Neerav Agrawal, The designing and structure of this beautiful one-day conference, I give credit to CA Karan Vora, senior members Dharmesh Bhai, past chairman Parimal Bhai, Darshan Bhai, and all the members in industry and practice. There are more than 100 registrations, and I'm really glad that when I was looking at the 100 names, blessing in a way કે કોઈને ઓળખતી નથી, પણ ખુશી એ વાતની હતી કે there are new members who have come to this one-day conference. So a big congratulations to all of you for joining us today. The design and structure of this conference has been brainstormed a lot. પહેલા અમે એક માળખું બનાવ્યું કે શું આપણે કવર કરી શકીએ. I'm just sharing the way it was designed so that you will get an idea કે કેટલી મહેનત આમાં કરેલી છે as far as the designing and structure of the conference is concerned. So we designed 4 sessions કે we want to talk about the way the M&A transaction is done, કે deal થઈ, structuring થયું, diligence થયું, and then we would be taking the cases from the industry. And then we thought, let's have majority of the panel discussion because there is no point talking about the methods. We have to talk about the challenges and the issues in the methods and structuring. So we thought, let's have all 3 panel discussion and only one session. Of course, we'll have a Q&A there, but only one session where we'll have one-way interaction. And the beautiful part is, when in the panel discussion, when we were discussing with the faculties, when we were designing the questions, all of us agreed કે આ એક સેશન 1.5 કલાકમાં પૂરો થાય એવો છે જ નહીં. So this is the gravity of the topic. This is the gravity of the esteemed speakers who are, we are really glad, Ahmedabad branch is really glad to have Ketan Bhai, Saurabh Bhai, and yes, wonderful kickstart. We'll look at the lovely story. અમે હિરાનંદ ભાઈને જ કીધું કે અમારે કશું નથી જાણવું, ખાલી અસરાલની અમને સ્ટોરી કહેજો. So I welcome you all today on this beautiful day. You all are connected with us in the mobile application of Ahmedabad branch. We are also on all social media platforms. So, and of course, you all would be getting all the updates through mails and the WhatsApp group. So I once again welcome you. I wish you all have a great learning day, a great networking day. And I once again welcome specially the members in the industry, जो branch में regular आते नहीं हैं. So once again, a big welcome to all of you. And if you have any suggestions, any ideas for us, please free to share. And I wish you a great day. Thank you so much.
The esteemed and honorable chief guest for this one-day seminar, CA Hiranand Savlani sir, who is Executive Director and CFO of Astra Limited, as we all know, being a very humble person by heart and always ready to support the fraternity from which he's coming, the chartered accountant profession. So sir, we are wholehearted thankful to you that you have been always supporting us, Ahmedabad branch. So not wasting much of time, I would request him to address on the merger and acquisition ecosystem and the latest trends in this merger acquisition. So sir, I welcome you with a memento and requesting ma'am to please offer memento to sir and welcome him to the one-day seminar.
Good morning, everyone. Thank you, Dr. Anjali Choksi, Chairperson, Ahmedabad branch, and CA Abhinav Malaviya ji. When Anjali called me and told me that, sir, you have to come and you have to address, I say, bhai, I don't know presentation. I don't have experience of giving address to so many audience. He said, no, you just come and give your real story. So today I am not going to share you all these presentations and all this thing, which I am thinking so many speakers are there in the coming session. One of them is Karan is sitting here only. So they will take care of all this thing, but I will definitely share you my experience of last 6 merger I have done. Sorry, 6 acquisition I have done, 3 merger I have done, and 1 demerger I have done. So this short span of my journey with Astral, from 2003 when I joined the group, that time my company's turnover was 15 crore rupees. And I'm very happy to share that last completed year, we crossed the gross turnover of 6,200 crore. So very, very amazing journey of this group. And in 2007, we came into the IPO. At that point of time, our market cap was 125 crore rupees. And today, close to 53,000 crore rupees. So a very, very short span of 16 years, we have done this achievement. Somebody who has put 1 crore rupees in my company in IPO, today in 16 years, that money has multiplied to 425 crore rupees. So that is what the small journey of 16 years of Astral. Now, before going into the real life experience, I think I want to share some of the statistics of M&A. Of course, now everything is available on Google. I have also taken up, my team must have taken up this number from the Google only. I don't know from where they have taken up the number, but whatever they have given the number, few numbers I want to share with you. So like in year 2018, the size of M&A activity in India was roughly about 101 billion US dollar, which is really good, a country like India. But after that, after 2018, these activities are accelerating. And the last completed year, 2022, this number is 163 billion US dollar, which is a very, very remarkable things for India, and we should be having proud on our country. And last 3-4 years, if you pick up the average also, so this activity is growing at a 24% CAGR, which itself is a very, very, I think, excellent number for our country. And this journey, if you see the last year's number, the biggest merger was HDFC Limited and HDFC Bank. The size of that, I think, was close to about 57 billion US dollar. So that is also one of the reasons that in 22, these numbers are very high. And second rank was, I think, Adani Group's acquisition of Ambuja Cement. So that was close to about 9 billion US dollar. Other than that, a lot of small, 3, 4, 2 billion acquisitions have taken place. But that is not significant to tell that these are the things. Now, as far as this cross-border M&A activity is concerned, I think India is lagging much behind. So if you see the 2018 number, it was roughly about 53 billion US dollar. And from that till today, more or less, it is moving in the similar line. So 2019, it was 42 billion. 2020, it was 54 billion. 2021, it jumped to 74 billion. And again, 2022, it's come down to 50 billion US dollar. So cross-border acquisition side, still our, I think, promoters are still not feeling that comfortable, because one of the reasons, maybe I personally feel as a corporate guy, that so much of opportunities are available in our country. When so much of opportunities are available, so much of growth potential is there for our country. Our Prime Minister has already floated the vision before us, the 5 trillion US dollar economy. So you can understand the kind of growth our country is expecting in the next 5 to 10 years. Believe me, the kind of things I am meeting with so many fund managers. I have traveled 26 countries, by the way. Okay, and I keep meeting with the fund managers across the country. So any good city you pick up, whether it is New York. Last week I was in 6 days, I covered 5 countries. So that kind of extensive travel I have done, and everyone is gung-ho about India. All fund managers, when I meet in Singapore, whether I meet in Hong Kong, London, everywhere, everyone is talking about India's story. So the equity is the area where you are going to create a maximum wealth in the next 10 years. So pick up any good company, DAM company, or pick up a good mutual fund, do some SIP, everybody will going to give the return in the next 10 years. That is the strength of India, because everyone is eyeing on India. And that is the reason you can see the way valuations of India is getting costly, but still everyone like the India. Because if you see the history of last 5, 7, 10 years, no country has given the return what India has given the return. Everyone was very happy with the China, but post-COVID, everyone is disappointed with the China. So everyone is eyeing on India. So a lot of foreign inflow is expected in our country. And the way I think our structure is getting built, and post-2024 election number, if we wish our Prime Minister get repeated, then I think we are expecting so much of inflow in our country. And that is going to take our valuation even further costly. So don't bother about too much on the valuation side, but buy the good stories, good corporates in India, and you will definitely going to make money. So now, coming to the main our topics of today, that why M&A activity? Why India is continuously growing this field, and continuously M&A activities are increasing. If you study the last 5 to 10 years corporate balance sheet, I think continuously debt is coming down. Continuously debt is coming down. You pick up the numbers of top 100 companies, top 500 companies, or top maybe 1,000 companies also. Continuously debt is coming down. The reason is that excellent valuation in India. So every promoter have understood that continuously taking a risk and growing the business with debt, it is always risky. And we have seen in past also many corporate has collapsed because of the high debt also. So now they have understood that thing, and thanks to the good professional people who are guiding the promoters, so they are diluting themselves to some extent and raising the funds and reducing the debt. So one of the reasons that the balance sheets are very healthy, and lot of companies are sitting with tons of cash also. If you see many companies' balance sheet, they are sitting on a cash. If you ask my small company, we are sitting on 500 crore rupees of cash. Now where to deploy this kind of money? So this is the easiest way that you acquire some good companies and grow yourself. So that is one of the reasons that M&A activity in India is going up. Second, the reason for growth is interest rate. Because if you see in last few years, the interest rate has come down substantially in India. Now again slightly going up because of the US reason and other things, and arbitrage is getting down. So because of that, now slightly our GSEC is going up from 6.9 to almost 7.25 or something 10-year GSEC. So, but otherwise even, we Indians are used to work between 8 to 9% GSEC 10-year for so many years. Now that has come down to almost 7%, which is a very, very healthy sign. Because any corporate which is borrowing at a 8% or 7.5% and deploying the money in a business, and that businesses are generally generating 15-20% kind of return. So definitely it is a clear arbitrage, and that's why because of this interest also corporates are moving to the M&A activity. Of course, the success ratio may not be that great. After post-acquisition, you realize so many surprises also. That's altogether different. That is, it depends on the individual corporate, how they are assessing. Now coming to the things why corporate do the M&A. One reason is the surplus cash, low debt. So because of that, corporates are doing M&A. Further reason of this M&A is that some companies go for the forward integration, because some products are there which is perfectly fitted to their forward integration. Like today you might having a good product, but if you don't have a good marketing arm, then it is very difficult for you to take your company to the next level. So they go for that kind of companies synergically which is fitted to their organization and their products, and they are going for the M&A activity. So one of the reason is the forward integration. The other way is the backward integration also. Now you have a good marketing things, you have a good brand, everything is there, but you don't have access to the raw material or the core things which is required for the business. So that's why also many companies do the backward integration and do the M&A activity. Then there are corporates who believe in inorganic growth, like my company. We are continuously believing in the inorganic growth. So like we started our journey with a pipe, and then we continuously grown in the pipe. So in year 2014, we thought that now only pipe is not going to take our organization to the next level. So in year 2014, we acquired a company called Reginova in November 2014, and one more company which we acquired in UK, the Sealit. So these two companies we acquired, and we completely did the diversification and started new journey in adhesive and the sealant field. So when we started that journey, I still remember the company's top line both put together was close to about 200 crore rupees. And I'm very happy that in a journey of 9 years, we have taken up that acquisitions revenue from 200 to last year, complete year was close to about 1200 crore rupees. So in a 9-year journey from 200 to 1600, so close to 18% CAGR growth of last 9 years. So that is a very, very healthy growth. So that was a very, very big success for our organization. Not only success in terms of top line growth, but that changed the landscape of our organization's valuation. Because any corporate, ultimately they are doing for the sake of valuation. Because valuation is very important. Because valuation is nothing but it's a currency. How best way you are using that currency and growing yourself, that is very important. That very, very few company or CFOs are understanding that your market cap is your currency. You should utilize that currency in the right manner, and you can take your organization to the next level. So then with success of this story, we thought we do further diversification. So we enter into the infrastructure side and we acquire one more company in 2018. And that company is also doing well for us. Then after the success of that, we thought that now this is not enough. So then we acquire one water tank manufacturing company, which was a small acquisition of 50 crore rupees. But strategically, it was good for us because we wanted to diversify and we wanted to extend our product basket because same distributor and dealers are selling this product. So we did that thing. And then again, we did one more acquisition, which is recently talk of the town, is the paint. Because paint is a very, very highly crowded business and all big shots are there, including Asian Paints. And now Grasim has also done an announcement of putting 10,000 crore rupees in paint. So that also we have taken a risk and we are going ahead with that acquisitions also. And that is also completely diversification. So we keep diversifying ourselves and we want to de-risk our company. Because suppose tomorrow something happened wrong to particular segment in which you are heavily loaded, like pipe, which is our bread and butter, then your company's performance will be completely havoc. So in that case, it is always better to do the diversification, do something in organic way, so that you can take the organization to the next level. Then there is another way of doing the M&A activity, that is the brand extension. That is also equally important. If your brand is strong, and within that brand, if you want to sell some more products, you can easily sell that thing. That is very, very important for any company who are a brand. So like Astral is today very, very well-known brand. Today you go to any corner of the country, I'm sure you will find the Astral brand. So we also believing in our philosophy that we should always do the extension of the business by way of M&A activity where we can leverage our brand, we can extend our brand. And that is why we have entered into paint also. That is why we have entered into the water tank business also. And that is why we have entered into recently into sanitary ware and the faucet also. Because it's nothing but it's a brand extension. Because end of the day, all this activities is connected with one common thing, that is the building. Any building you are putting up, you need a pipe. Any building you are building that need the adhesive. Any building you are putting, they need the water tank also. Any building you are putting up, you need a sanitary ware and faucet also. So ultimately, everything is moving around the building. And that is why brand Astral's role comes. Because brand Astral is very strong into the building material. So the moment consumer, maybe developer, maybe contractor, maybe retailer, maybe distributor, everyone know brand Astral. So giving other product to the same set of people, it's a clear extension of your existing business. So that's why also M&A activity is needed. Then there is a leverage of network, because many companies are having so much of vast network. Then also you need to leverage that network. If you don't leverage that network, it's not going to work you, because you have created a network, which is a very, very costly affair for any organization to create network. If I give you my company's example, today we are having close to about 40,000 dealers working under the brand Astral across the country. And close to about 160,000 dealers are working in our adhesive and sealant side. And close to about 4,000 dealers are working for our paint business. Now such a vast network is there, more than 2 lakh counter. Having 2 lakh counter, believe me, very few thin-full companies are there who are having 2 lakh counter. Now your job is how to extend that counter, how you do something whereby you can increase sale per counter. Because ultimately you have the counter. So now if some counter is doing 20,000 rupees sale per month, you have to think how he can do 30, how he can do 40, or how he can do 50,000. So you have to understand the people who are working on the counter, that which product which we can give you, whereby you can increase my sale from 10,000 to 20,000 or 30,000 or 40,000, whatever number. And based on that, you have to do the backward calculation and tell your team that you find out that solution. And for that also, M&A is the best way to move fast. Then another things for M&A is the market cap. Because market cap is very important for any organization. Ultimately, the success story or whatever we are seeing, the billionaire list or top 10 companies or top 20 companies and all, ultimately is decided on the basis of market cap. So market cap is equally important criteria for the M&A activity. I can give you an example of my company. Like my company share is today trading somewhere around 100, 110 PE, which is the highest in the, you can say, the list of Indian company. We may be top 5 companies in the country. Okay, of course we are a company based in Ahmedabad, which is not in a limelight. People always give the examples of Infosys, Wipro and Reliance, or maybe Asian Paint and all these companies example. But believe me, the kind of return which Astral has given, none of these companies have given in last 10 years. So we are among top 10 return provider company to the shareholders. So how to use this market cap? So now my company's multiple is 100, 110, or maybe EBITDA multiple, maybe we somewhere around 50, 60 time EBITDA. And if I am getting some company which is relevant to this criteria, whatever I discussed, forward, backward, inorganic, brand leverage, anything, and which is available at a 15 multiple, P multiple, or maybe 7, 8 time, 10 time EBITDA multiple, or maybe 1 or 2 times sales multiple. So in all respect, the moment I acquire that company, you know what happened? The very first day my market cap will shoot up. Because I am paying 10 to 15 time PE to that company, and my PE is at 100, 110. So straightway close to about 8 to 10 time value accretion from the day one. But at the same time, you have to also understand that it should be synergically fit to your organization. It's not that tomorrow I go and acquire the cement company at 15 multiple, my market cap will go. My market cap will can other way around also. So you have to also equally understand that which company you are acquiring. That is very important. If you are not acquiring a company which is synergically fitted to your organization, then your market cap can go down also. But if you are acquiring within the parameter which is fitted to your organization, then definitely your market cap. And it is a history that normally when we acquire the company, our market cap goes down initially and then shoot up. Because till the investor understand what is the rationale behind acquisition, they will not going to give you the valuation. So I remember when we acquired recently only the paint business, my stock was down by almost 25%. 25% on a 30, 40,000 crore market cap, this is a huge. So then I decided that I have to go. So I traveled extensively. I went to London, I went to New York, I went to Singapore, I went to Hong Kong, every city where the key investors are sitting, and definitely Mumbai is always there. So went there, explained them, every fund manager, what are the rationale behind that. And after understanding that rationale, my stock is up by almost 40, 50%. So unless and until you are not rightly communicating to your shareholder, sometime your acquisition may be backfire also. So that also you have to be mentally prepared for that. And then some region can be also the killing of competition also. Sometimes what happens that you feel that this particular guy is all the time harassing me. And because of that, a lot of problems are coming. Because of that, growth is the challenge. Because of that, the margin is the challenge. Then what they do, they acquire that company. And in that case, they give the highest valuations also. Live example, of course, they are my competitor, but I don't hesitate to name also, is the Pidilite. So if you see the history of Pidilite, they have acquired more than 25 companies. And major is that killing the competition. And they pay very, very hefty money for the acquisition. The recent acquisition which they have done, they have paid a 350 or 400 crore top line company, they have paid 2,100 crore. So 5 times sales. So that is what the things in the market. If you feel that this competition is going to trouble me for my growth or for my margin, then there is a risk to the organization. So they offer any valuation. One of the example of Ahmedabad-based company, which they came to me, I was talking to them, I was discussing with them, and we were at an advanced stage. They offered me at 160 crore rupees. The moment my competitor come to know that Hiranandji is working on this target, he called him, he locked him in the conference room of 5-star hotel for 3 days, and he closed the deal at 265 crore rupees. So he paid 100 crore extra than what he offered to me. So that is what they meant. The moment you get some sense, either you comes under the fear, you can offer any valuation, which can be a crazy valuations also. So now coming to the next point, What are the criteria for acquisitions valuation? Because it is a very, very subjective. It is very, very difficult to define what can be the valuation for any acquisition. So we normally, professional people are there, we have learned in our studied, we have learned from our experience also. So normally somebody apply the EBITDA multiple formula, somebody apply the discounted cash flow method, somebody apply the P multiple, somebody apply the sales multiple also. So there are so many, some do the asset multiple also, because some companies which are not making sizable profits, so they go on the asset valuation basis also. So there are so many ways to do the valuation. And believe me, none of them we can say it's the right method. It's depend the buyer and seller. How the buyer is feeling about that organization, how the seller is thinking for that. And normally we all professional work for so many numbers and all this thing. But you know, reality, I tell you, your promoters are always determined in their mind that I want to acquire this company. Then all your valuation funda goes away in dustbin. This is the reality I'm telling you. So ultimately, if the promoter is thinking that I have to acquire this company, then he will be ready to pay anything. He is not going to see any of the criteria. He say, I want this company. Because promoters are always visionary. And that is why they are hiring people like us. If we are that kind of visionary people, then why we should work for them? We should do for our own. And that is the big difference between promoter and the professional people. We should accept that reality. The kind of risk-bearing capacity of the promoter is that risk-bearing capacity will never be with us. So that we have to accept and we have to go ahead with that. So basically all these criteria are there for, I think, valuation, but it's just for the sake of reference point or just sake of convincing your promoter that this is the way things are that now you decide what you want to do. And some good promoters are that, like my company, who always listen the professional people. So whenever we present him the different parameters, he understands that thing and he allow us to do what you people feel fit. So that is the very few promoter I can tell you are that they believe. Sometimes they become also other side also. Sometimes they don't listen also. So that is always the part of the, you can say, the job you are doing in the corporate. So you have to ultimately work out the pluses and minuses of the particular target where you are working for that. So I can give you a few of the examples which actually happened with me. That's why I'm going to share. Anjali, you have to tell me the time. I don't know. If I will start, I will continue. So another 10 minutes? Okay. So I was sitting with the one Big Four, a city like Delhi, in their office. I don't want to name because it's not fair to give the name of anyone. So we were discussing on the table. I was sitting with the promoter, lady promoter. We were sitting with there and discussing with the valuations and all. So I come to the certain calculation and I presented my point of view before them. Everything was discussed, and then in a lunch break, the guy who was working on behalf of me, okay, he told me that, Hiranandji, another buyer is ready. If you don't close the deal today, he is ready with the check, okay, and this is the valuation. So you have to take the call today only. Now you can understand, in 24 hours you have to take the call, it's not an easy task. So I called my promoter. I said that this is the case. So my promoter says, Hiranand, you close the deal. Don't bother about the valuation. I said, sir, but it is a pathetic valuation. I'm not comfortable at all. So please understand, this is not a good deal for us. So he said, no, I am telling you, you close it. I said, sir, but I am borrowing one day from them. They have given me tomorrow morning 11 a.m. time. Okay. I will reply them before that. But before that, I want to show you my working. After that, if you say, I will be comfortable. So he said, okay, you come down, Ahmedabad. And so during this lunch meeting, he was continuously telling me that this is the things, you should take quick action. And then I realized that how you come to know that this is the valuation somebody is offering. It's a closed door deal. No promoter will disclose the number, what others are offering. So how you come to know? No, I know from my sources, My colleague is working for that deal. Then I realized that the buyer and seller is the same guy. The same Big Four was representing for the buy side and the same Big Four was representing from the sell side, which is completely unethical. You can't do like that. So then I have a more suspicious in my mind. And then I started talking few things with him, and then I was not comfortable. So I went back to Ahmedabad and explained my boss that this is the thing. So he said, no, Hiranandji, you are right. This way we cannot do the deal. So then he was keep chasing me from morning 8 o'clock that, sir, please close, otherwise it will go away. I said, let him to go away. I am not interested in the deal. Okay? You will be surprised to know that deal came back to me with 30% discount after 1 month. So you should never ever come under the pressure and do the things. And secondly, suppose something goes away, you should not feel regret also. If destiny is there, you will go there. So sometimes you have to understand that thing. And sometimes you have to also understand the strength and weakness of the seller also. One more deal I was working, we signed the paper, close to about 200 crore rupees. Everything was fine, everything was decided. Then last moment, I got one negative news from the seller side. One of the banker, he told me that, Hiranji, that company is in trouble. You know? I said, I don't know. He said they are in trouble and the situation is that they don't have a working capital money and they are delaying salaries also. I got the hint. You will be surprised to know I walked out from the deal, which is the signed deal, but non-binding. Okay, I said, I don't want to do the deal. I need a time. So my boss said, we have done everything, due diligence is over, documentation stage is there. Why you are doing? I said, sir, I have a confirmed information that these are the problems. So we should utilize that thing. So it happened because you come to know from the banker that this company is in trouble. But many times, everything doesn't come on the document. On paper doesn't look like that. Now you are delaying salary, due diligence will not tell you that you are delaying the salary. So you have to understand due diligence is at a particular point of time, then you do the negotiation, all the 3, 4 months, 5 months go away in between also. So then we stopped that deal, and that same deal we closed 50 crore rupees lower after 3 months. So you have to keep your eyes open all the time. You have to always see the weak point of the seller. Unless until you are not seeing the weak points of the seller, you will never come to know what is the truth. So you should always be vigilant. You should keep meeting the people connected with that organization. 1 or 2 good information is going to help you in a big way. Then the critical part of this, after this valuation, is the due diligence. That is very, very important. And always get the due diligence from a good reputed organization. And Big Fours and all are really good as far as the due diligence are concerned, because their method of due diligence is excellent. So if you do small saving in due diligence, if you cut corner on the due diligence side, you are going to be in a big trouble. So always be ready to spend more money on the due diligence, because that is the mirror to you. That is going to show you the reality of this organization. If you are not doing the right due diligence, then I am sure you may be stuck. So always spend little higher money on the due diligence and get it done through a right person. Otherwise, if you picked up the small firm, they might not be having that kind of expertise of having the due diligence, because all Big Fours are doing a deal from 50 crore to as high as 50 billions also. So they have a checklist. So based on that, they do the due diligence. And believe me, most of the things they are covering. And then you have to also be mentally prepared. While doing the due diligence, you see any company's acquisition trigger. Last 2 years onward, things start moving positive direction. And futuristic number always at the high. Always at the high. This year they are doing 10 crore rupees profit, but if you see the futuristic profit, they will say in 3 years I am going to double my profit. Every merchant bankers are doing like that. Always they give you the futuristic number very, very high. So you have to always see that what is the average of EBITDA of last 3 years. And you know, all these merchant bankers and everyone is so smart that before deal comes to the table, 2 years before window dressing start. Always. You pick up any company. They start doing the window dressing. So they start inflating the profit, they cut the expenses, whatever best way they can do, they are doing. So you have to always see that what they are doing. You should be sharp enough to understand what kind of window dressing is happening. And this is the universal. Because they want to sell, that's why they need the maximum valuation. And for that, they are doing. And in India, if you are there, then again the off-balance sheet items. That is the another pain point. How to recognize that thing, how to evaluate, how to count that off-market. Every promoter will say that this is off-market transaction, this is off-market transaction. So very, very difficult to arrive the number of off-market thing. So in that case, you have to be extra careful. Otherwise, you will be stuck. Now, suppose hypothetically a small company is there, 15 crore, and if we say 3 crore is off market, so valuation parameter will be completely changed. 15 to 3 is close to about 20%, which is very high number. And this is a common in this M&A deal. Everyone say that I am doing this off market, I am doing this off market. Now, thanks to GST, now things are reducing that side. But otherwise, pre-GST era, this was common. So we have to also see that part also. And you have to read DD very carefully. Each and every line of DD you should read. Because that is going to open your eyes. What are the negative things of the organization? Good things you know. And sometimes surprise also come in the good side also, but rarely. But negative side, whatever they have marked in the DD, you have to carefully see each and every line. Because from there you will get the sense what kind of risk you are going to take in this acquisition. Unless and until you are not evaluating your risk, then there are high probability that your judgment can go wrong also. So DD is very, very important. From a reputed organization is very, very equally important. And you have to read DD report very, very carefully. Because that is going to give you so many things which you are not aware about the organization. Then after DD, you have to see whether you are able to mitigate that kind of risk, because DD will be always full with red flag. All red flags will be there in the DD report. But you have to see whether you are able to mitigate that red flag. That is very important. Many times so many red flags are there, but that may not be that important to your organization. You feel that I am comfortable to handle this red flag, then absolutely no problem. But seriously, if you see that this red flag is very critical, then you have to be careful. Now I can give an example. Suppose somewhere unions are there, and some state unions are very, very strong. Now you have to also understand that, are you capable to handle the union? If you are capable to handle the union, then absolutely no problem. But you feel that is going to be a problem, then you are giving crores of rupees for that acquisition, and tomorrow something goes wrong and your factory stop working, what you will do? So you have to clearly see 1, 2, 3, 4, 5 red flag, discuss with the promoter that these are the red flag which are there in the DD report, and whether are we capable to handle that thing. Few you also know as a finance person that we can easily handle. But some red flags are such where you have to discuss with the promoter that these are the challenges, are we capable to handle? Or we want more clarification on that, then you have to do further DD again and get into the root cause also. So my message to everyone is that don't ever hurry in the M&A activity. You have to be cool and calm. Because if you don't going to give the time, there are high probability the judgment can go wrong. And that can be a fatal also to the organization. Because when you are doing a sizable acquisition and it doesn't work in your favor, you understand the kind of pain will be very high. And that too, particularly a listed company, it is going to be a more painful because it's directly connected with your market cap. Private organization still is fine. In 2-3 years, you can rectify that thing. But in a listed company, immediately the effect will come on your share price. So that is going to be a really, really, really suicidal if you are not understanding the risk. Secondly, we, after doing so many acquisition, we realize in our organization that most of the acquisition which we have done, everywhere we have find the surprises post-acquisition. So surprises can be in form of, you can say legal side, surprises can be on the side of profitability, surprises can be on the side of growth, multiple surprises will be there. And that is a common in any M&A activity. Surprises will always be there post-acquisition. So then what to do? because ultimately you have to deal that surprises. So in that case, multiple ways are there you can handle that surprises also. Some organizations are keeping the escrow account. Okay, that some 10%, 15% or 20% money you can keep in escrow account, and then you handle whatever the surprises are coming, you can compensate through this escrow account. Some now recently that new trend has started that corporates are taking the insurances also. So insurances are also international level available. Actually, I have not taken the insurance because when I come to know about the insurance now, before that I have done all this acquisition. After coming to know the insurance are available, I have not done any acquisition. So I am not exactly aware what kind of insurances are that. But recently somebody told me in Europe that, sir, if you feel it is a risk, why not you take the insurance? I said, that is the best. If insurance is available, you have to mentally prepare that even if the insurance cost is 1%, you should mentally prepare that I have paid 1% more consideration for the M&A. But at least you are safe. Any big ticket surprises come, you can cover yourself. So that option is also available. And then you have to also see that what kind of commitment you can take from the previous management. That is also equally very important. So normally, recent our paint acquisition, what we did, we given the promoter that, okay, we are comfortable with your valuation. But then in that case, you have to guarantee your profit. For next year number, you have to give us the guarantee. So even if any surprises are done or any window dressing is done, everything is done, that will be covered because by the time your team will take charge of that financials. So you can come to know. And if genuine promoter is there, he will give you the guarantee that, okay, next year I am going to deliver this much of EBITDA, this much of top line or this much of PAT. But if he is not giving the commitment, then there are high probability that there is some fishy activity. So we always try to get the commitment from the promoter that you give us the assurance that this is the minimum, whatever number you are telling, we want minimum guarantee only. Whatever is extra, that's fine. But we want, even if 10% less he is giving, take that commitment. Otherwise, what will happen, a lot of surprises will come and then we will be stuck. And you can't do anything. Once agreement and everything is signed and money you already paid, then what can you do? So that is very, very important that you should always take care that if possible, take the commitment from the management, from the profitability point of view or a top line point of view. Now, lack of time, I want to finish now quickly. What are the challenges post-merger? Because merger is very simple because you are paying money or you are getting things. So if you have money, you can do anything. You can acquire any company. But it's not so simple because post-merger, a lot of challenges are there. And that is very, very critical for the success of the merger. Merger can happen, but whether that merger is successful or acquisition is successful, that is very important. Merger is okay, it's the same companies are getting merged. But acquisition side, that is very, very critical. So now, what are these kind of challenges? First challenge is the retaining the talent. Normally, the moment you acquire any company, the fear factor start the company which is selling themselves. All the employees of that company will start getting fear. Now, new management card, new CFO will be there, new board will be there, how I will be able to handle them. So fear factor start. And particularly at the top level. So they start finding the alternate jobs. So first thing you have to ensure that you call the meeting of this all senior people and give them the confidence that we are not going to remove anyone. Please trust us. Your growth will be even higher because you are now going to join with the bigger organization. But that message should be loud and clear. Otherwise, if the fear factor will start and people start moving, then you can't handle the things. Whatsoever good people you are having in your organization, but understanding the company is always a challenge. Unless it is in the same field in which you are there, still you can manage. But if you are in a diversification or somewhere, and if the key management will go away, then handling will be very, very difficult. And that will take more time to your payback. So that is very important. Secondly, the change culture. That is very, very important. Because normally, human psychology is such that nobody wants to change themselves. Even in our home also, you try, your wife will not change. So then how can these people will change? And so many people are there. So it is very difficult for anyone to change them. So in that case, you should be having the right people in your organization who sit with them, give them confidence, and make them change over a period of time. Never ever expect that everything will happen in next 12 months. Cultural change will take always time. पहले 1 साल तक तो तेरा मेरा ही चलता है. हमारी कंपनी में तो ऐसा ही होता है, आपकी कंपनी में ऐसा होता होगा. Always they are fighting. Hey, we have done this thing for last 20 years, now you want to change? I am working with the right now cultural change part in one of my recent acquisition. You will be surprised to know so many things is coming on my table. Sometimes I am laughing. The small things they are not able to understand. But they will not understand because they work in under that culture. So they feel they are the best. Even if you are a bigger player, you are having more professional people with you, but still they will always feel that we are the best. You don't understand our company. You don't understand our business. This is the common thing. So you have to be patient. Don't get excited. If you get excited, that people will go away. Then there will be a different kind of pain. So cultural change is the biggest challenge for any acquisition or a merger. Then integration. Integration is equally important because integration of people, integration of business, integration of systems, all these things take a lot of time. So you have to be carefully design the integration part. Otherwise, if you are not designing in a right way, the integration may fail. And then there will be a big challenge. So you have to understand that part also, and then the HR integration. This is the most critical. Because HR has to understand that certain set of people have worked in a certain fashion, they will not change quickly. So they have to sit, do the lot of counseling with them. The biggest challenge is in a small company, somebody is having the designation of vice president. Now, if you are merging two company with a bigger organization, can you maintain the vice president designation? And even if you maintain, then your existing people will start, sir, he doesn't have a knowledge, he is coming from a small company, you are giving vice president designation to him, and you are giving us GM designation only. You should make us president. Because we are much bigger, and we have handled a much bigger company also. So that is very important. So, and then the salary structure also. Because that is also equally important. In a smaller company, sometimes you are dependent on 1 or 2 person, you can offer any salary to them. Because you know your dependency is on that person only. And your company, so many people are working. So you have to balance out. So you have to equally see that how we can do the balancing part. So there are so many ways which I can't discuss at open platform, but you can do so many things whereby you can maintain the staff also, and at the same time, you should not displease your existing team also. And then coming to the roles and responsibility and the reporting structure, that is also equally important. Because the moment you start telling that you have to report 5-7 people, they will not be comfortable. And when you are working in a bigger organization, even a smaller task, some separate person is working, so you have to report him. So that takes a lot of time. So you have to be very, very cool-minded to do this all integration. Otherwise, I tell you, whatsoever good company you are acquiring, whatsoever good product you are having, but it's not going to work. And then you have to bring them slowly and gradually on your policies, because policies are very important for any organization. Every organization is working on certain set parameters, SOPs, policies, and all these things. So every company's way of working will be different. So slowly and gradually you have to bring that to your culture, and then you can make the change. Otherwise, we'll try to do fast, collapse. And that is going to be a big pain. So these are, I think, practical aspect of any M&A activity. And I think my time is over, so I am not going to take time. Otherwise, I will going to spend another 2-3 years because I have so many years of experience, practical experience. So thank you so much, everyone. Thank you, Dr. Anjali, for giving me the opportunity. And if anything is left out, anyone want to reach me, please, you can reach me anytime. Thank you so much.
So before I deliver the vote of thanks, on behalf of all the participants who are present in this hall, we all appreciate and congratulate Astral Limited, the top management of Astral Limited being led by you, in which you have played such a pivotal role where you have created wealth for the investors and you have delivered approximately 400 times return to the investors in 16 years. So big round of applause for sir, who is heading such a blue chip company in which all the investors can trust upon, all the investors could trust upon. Sir, you shared upon why M&A has to be done, or why it is done by using cash or interest rate, forward integration, backward integration. And sir, you also shared your practical experience with respect to due diligence, red flags, integration, and cultural change. Sir, you spoke your heart out, and also we thank that you were traveling since last 6 days and have traveled across 5 countries, but you took time and accepted our invitation to be chief guest. We would be also liking to welcome in future as well at Ahmedabad branch. So thank you so much once again, sir. And I thank all the participants who have joined in for the inaugural session.